Hi, I'm John with Tax TV, here with some information about accounting methods available for construction companies. There are special tax rules controlling the accounting method that must be used for the construction business. The choice of accounting method depends on the type and length of construction contracts, the completion status of the projects at year's end, and the construction company's annual gross receipts. An accounting method is a set of rules to determine when and how income and expenses are reported. Accounting methods are divided into two types: cash and accrual. Most construction companies use the accrual method. A cash method taxpayer generally recognizes income when received and deducts expenses when paid. There are two situations in which the cash method can't be used. First, the cash method is not allowed for corporations or partnerships with a C corporation shareholder as a partner whose average annual gross receipts exceed $5 million. And second, cash method is not allowed if the total purchases of merchandise for the year are substantial when compared to gross income for the year. In the construction industry, merchandise is commonly called materials that include lumber. Merchandise is generally considered substantial when it is at least 10 to 15% of gross income. The other methods available are the accrual methods. In the construction industry, there are several specialized accrual methods available, each with its own rules and limitations. There are 4 steps to choosing a permissible method of accounting. These steps should be reviewed each year. First, classify all construction contracts as either short-term or long-term. Long-term contracts are any contract that spans a year end. The overall method can be used for short-term contracts. The following steps will determine the method for long-term contracts. Secondly, classify the long-term contracts as either home construction or general construction contracts. Home construction contracts are for work on buildings that have 4 or fewer dwellings, and 80% or more of the estimated costs must be for the construction, improvement, or rehabilitation of these units. All others are general construction contracts. There are a number of accounting methods available for home construction contracts. For general contracts, there is one more step. The third step is to classify the company as either a small or large contractor, which is a 2-part step. First, measure the average annual gross receipts for the last 3 years. If this is $10 million or less, the company is a small contractor. If it is over $10 million, then the company is a large contractor, and the next step of the analysis isn't relevant. Large contractors are required to use the percentage of completion method for their long-term general contracts. The second part of this step, for small contractors, requires separation of long-term general contracts into 2 categories: those likely to be completed within 2 years and those which will not. These contracts not likely completed within 2 years must use the percentage completion method. For more information about the other accounting methods available for construction companies, you can build up your knowledge at taxtv.com.